China is executing its boldest financial move in years, and it's working. While the world watches inflation and interest rates, the real story is unfolding in the bond market, where China is quietly dumping U.S. Treasuries at scale. This isn't posturing, this is economic warfare. In response to massive U.S. tariffs, China is now offloading U.S. debt at a rate not seen since the 2008 crisis, and every bond they sell sends U.S. interest rates higher, not lower. Why does that matter? Because when bond prices drop, yields rise, and the cost of borrowing explodes. That hits everything from mortgages and credit cards to the U.S. government's ability to service over $30 trillion in debt. It's not a bug in the system. It's the whole point. This is the financial version of a pressure campaign, and it's working both ways. China's goal? To hold the yuan strong while countering U.S. tariffs. But to do that, they need dollars, which means selling their massive U.S. Treasury holdings. The result? Global yields are spiking, the bond market is panicking, and the Fed is now boxed into a corner. Do nothing, and the economy buckles. Step in, and we return to money printing. And here's the kicker. The man at the center of this? Scott Bessant, Trump's Treasury Secretary. He's the same guy who helped George Soros break the Bank of England in 1992. The strategy is familiar. Create conditions where the other side has to make an impossible choice. Back then, it was the British pound. Today, it's the Chinese yuan. And maybe the US dollar next. But here's where this becomes your opportunity. When interest rates spike and monetary systems strain, smart capital moves to hard assets. Bitcoin, Ethereum, and top-tier crypto projects become more than speculation. They become shelter. We're already seeing OTC Bitcoin desks dry up. That means institutions are running out of ways to buy crypto quietly, and may soon be forced to buy on the open market. If the Fed steps in with rate cuts or balance sheet expansion, which becomes more likely by the day, we could see an explosive rally across risk assets, and crypto will be first in line. You don't need to guess every headline. You just need to watch the pressure build. That pressure is now global, and it's pushing capital into places that can't be printed into oblivion. So what am I doing? I'm not trying to time the bottom. I'm stacking Bitcoin. I'm eyeing key altcoins. And I'm watching macro indicators like bond yields, liquidity flows, and foreign reserves. Because once this move accelerates, once the Fed flinches or China runs out of treasuries, crypto won't wait. This isn't just about the dollar. It's about what replaces trust when fiat confidence cracks. Smash the like. Share this with someone who's still waiting for CNBC to tell them what's happening. And ask yourself, if the old system is this fragile, where does your wealth go next?